Good morning, everyone. Welcome to the On Time, On Target morning brief where we invest with fighter pilot precision on a daily basis. We're continuing to talk about earnings today. So to today is a big day for Apple after the bell, Facebook after the bell. There's a bunch of others out there, but I think those two will be the ones that are going to carry the news cycle, if you will. If you flash back to Monday, we had Tesla after the bell beat earnings, but then sold off a little bit. Yesterday, we had Microsoft beat earnings, sold off. And then you had Google, who crushed earnings and is now up 5%, mostly from last night, a little bit this morning, with a big stock buyback repurchase agreement up to 50 billion. A lot of stock being bought. Again, that removes stock from out there, so it makes each individual share more valuable. So great news for Google. Technically, the parent is Alphabet there. So what's going to happen to Apple today? That's what we're going to talk about. Everything is set up perfectly for a good quarter and it to go higher. We shall see. We'll also take a look at Facebook as well, and I'll give you my prediction on that. If you're catching us on replay, thank you so much for checking us out. Make sure you hit subscribe and the notifications bell so you get notified on a daily basis when this goes live. If you want to join us in the room live, I have a Q&A window and a chat window off to the side where my folks can communicate with me and ask me questions, because we cover a topic and a question every day. And with that, let's go ahead and get started. All right, welcome back, everyone. Here's our lineup card for the day. Today, Wednesday, April 28th. Make sure you have your Q&A window set up as well as your chat window set up so you can communicate with me. I'll hit up the chat one more time for the folks that just showed up. So there's what we have in the chat windows, the long, the shorts, the topics, and the question of the day. Standard disclaimer applies. This is a financial education presentation, so you have to do your own due diligence for acting upon anything you hear in this presentation. Full disclaimer information is available at ototnow.com. All right, mission objectives today: grow our money, protect our money, and live off our money. Very much talking about growing our money, investments in big technology, which you know I love, and trying to capitalize on that high margin, high subscription. You talked to Microsoft yesterday. They have Azure as their cloud play. That makes a ton of money. Alphabet owns Google and YouTube as well. And the numbers from YouTube are quite astounding. I mean, I upload this every day. I don't qualify for advertising yet, but I probably will by next year. So when you think of, one person, me, producing content on a daily basis times, a kabillion people out there that are producing content. And once it gets up to a certain level, they basically, you have to have 4,000 hours, I believe, of your videos watched. And I think 1,000 subscribers or something like that, but pretty achievable numbers if somebody's at it for a year or two. And at that point, advertisers are invited onto the platform, and there's all that ad money that comes rolling in. So again, that's how they make that money. And what does it cost YouTube to do that? How much does their content cost? Nothing, right? People are voluntarily putting it out there for all kinds of things, whether it be funny videos, reaction videos, or educational videos. In my case, there's a lot of people producing content for free. So it's a little better business model than Netflix, where they have to go out and buy pay millions for the content out there. People are producing it for free, handing it to them. Have YouTube stars out there making all kinds of money. So pretty good business model all around for technology. Switching to today, we have Apple and Facebook. Apple, really a tech firm. It's kind of a luxury firm as well. So a lot of things to like there. They have, the iPhone is kind of the staple, but you also have Apple Play, Apple Fitness, Apple TV, all kinds of different subscription stuff that are out there that people are just like, sure, I'm in. No worries. So lots of ways to win out there. And then when you look at Facebook, Facebook is really just the premier advertising model that's out there. For those of you that have attempted some small business stuff or in the process of doing small business stuff, running a Facebook ad targeted to a 5 mile radius around your, if you have a brick and mortar location, is about the easiest thing ever. I write for a local publication. I put an article out once a month. I pay a few $100 for a Facebook ad that accompanies with it to run a specific promo that I have tied to the article that goes out locally. And again, nobody outside of 5 miles from my house even sees that. So pretty cool as far as targeting advertising and, getting your name to, even if people don't click on the ad as far as, buying something, your product or service right away, they are certainly getting top of the mind awareness, which is for folks like me that are service professionals. That's what you want. You want your name out there. You want people to think about it, and have seen it several times. So in case something happens, and, strangely enough, in the finance world, it's, a life-changing event happens. Usually somebody passes away and there's an inheritance, or a divorce happens and all of a sudden there's a split of assets. And, in most relationships, there's a money sheriff and a non-money sheriff. Well, the non-money sheriff is the one that needs help usually. So, if somebody like me, use an example how, taking one person and multiply that across the whole world, if you will. If one person like me uses that, well, goodness, that must mean a ton of people use it. So again, Facebook, they do catch some negative, negativity regarding privacy. But if you use Facebook, you're kind of volunteering into that. So, overall, there's nobody out there that really touches Facebook as far as advertising revenue. All right, question of the day, Coverdell ESA. This is a rare thing, but if you're saving for your kids for college, there is a way you can use individual stocks. Again, the limits are pretty low compared to the 529, but it is something that you should at least be aware of. So that's what we'll talk about later. Flow will be long, short, open, short, long. We'll talk around the market review around the world. Come back to the headline. Our futures are pretty flat here going into earnings for today. We'll talk about Apple, Facebook, and of course, Amazon is on deck for tomorrow. We'll get into the market open. Contingencies and academic resources are standard. As far as the market open, here's how I have it set up. You see it in the chat. Hit up one more time. Person just showed up. There you go. Looking at GSX, which is the China. It's not the railroad, but it's a Chinese technology firm. I got a rare upgrade, double upgrade to buy. Deutsche Bank crushed earnings, and then we have Spotify selling off pretty hard after earnings. You can see the earnings number down there, losing money. All right, so zoom out a little bit to where we are in the long term. Again, bouncing off on new all-time highs here in the S&P 500. So pretty strong market overall. When you focus in on the last 5 days going into this morning, here's what you see is kind of flatlining here for the past couple days, right? So here's where we ended up on Friday. That's Monday, that's Tuesday, and then here's today. So not a whole lot going on. I think there's the concerns of a toppy market balanced by there's some companies that are crushing earnings out there. So overall, a couple of forces there I don't see really. If anything, I think the market gets carried higher today, probably after the bell by both Apple and Facebook. Really expecting big numbers from both of those. All right, let's go ahead and take a look at around the world. Go over to cnbc.com. Get over to the correct tab here. All right, so there you can see the futures are mixed here in the US. Here's our numbers from yesterday. Again, pretty well flatlined. Europe in the green across the board. There's your Deutsche Bank up 9% pre-market. Asian numbers are up across the board. So yeah, I could see that having a positive hangover, if you will, here in the US markets. 10-year did jump some. It's up back above 1.6, a pretty significant jump actually, as far as these things go. We do have the Fed decision here today. Again, the expectation is that they say we're not going to change. We're not going to touch interest rates for a couple of years because that's what they've been saying. But everybody gets excited about it going into the Fed meetings every 6 weeks. Oil above 60 there. Gold and silver selling off just a little bit. And then Bitcoin really hasn't moved much, just hanging around that 55,000 level. Okay, into today's headlines again, 2 o'clock p.m., 1 o'clock here in Texas. Since most of you are in this area, is when you get the Federal Reserve decision. Remember, if you haven't ever looked at one of these, it's one big paragraph, and they actually go through and line out the differences between the terminology from last time to this time. So it's pretty well done. That pops out, and there's almost always a market move off of that, depending on how people interpret it. Even if you change one word, you know, very likely to extremely likely, and all of a sudden that's enough to move markets. So it's kind of interesting. New mask guidance going out. You can dig into that on your own. I think it's great to get rid of the mask sort of a thing. 1.8 trillion plan for children and families. I have to, I don't know, it's to unveil. So I was going to say, I don't know about that. So I will dig into that and see if there's an investing angle on it. Boeing had a loss, so their stock's selling off this morning. That's more of a long-term hold. Now sitting on 2.5 billion. Remember, they sold a bunch, so I think this is really just coming back and saying, well, they still have they sold a bunch, but they have more, sort of thing. All right, vaccines. DraftKings gets a new buy rating. You know, I like DraftKings. Yeah, this is kind of crazy. YouTube, could equal Netflix in revenue. So kind of interesting. I do have YouTube Premium. I'm not sure how much. I mean, I think advertising is the big deal there. I'm not sure how much I even pay, like $15 or something for YouTube Premium. But yeah, that's pretty amazing. Thinking YouTube's up to the level of Netflix. It's like wow, right? Okay, let's go ahead and take a look at Apple real quick. Here's where Apple is going into earnings. So you look at the past, back in September, they were higher than they were now. This is now late January going into February. They're up at 142, kind of sold off. So really looking good going into earnings. When you look at the PE ratios, those are certainly decent. They do play a little bit of a dividend. There's projections that they're going to raise the dividend. I don't really think that's the case. If it does, that's going to be that's free money, if you will, coming in through the dividend, a little something for owning it. And for those of us that, have a sizable chunk, yeah, I do enjoy when the Apple dividend hits. That's a nice little chunk of change. As far as in the past year, it's still gone up 90% in 1 year, but still that almost lags a lot of other things out there, right? So you had the big split last year, so I really do think this thing's could go higher today. Let's take a look at Facebook real quick. I have a couple minutes till the market open. Facebook, same sort of thing. It was back here in September, the big run up post COVID, kind of sold off for this year. I think there were some concerns about how much the Democrats were going to come down, after the blue wave, after coming down on the big tech companies. So there's some hesitancy to hold the stock. It's kind of grown out of that to new highs up to 313 and just below that. So really, when you look at the valuation numbers, again, no dividend, but looking at a PE, earnings per share, if they make their 13.56 dollars per share, these are amazing numbers. So look at all the ocean of green out there. So I could see Facebook going higher today as well. So that's my call. All right, let's switch over to TD Ameritrade Think Pipes to get ready for the market open. That's what you're seeing here. All right, good morning, everyone. Welcome to the On Time, On Target play of the day. You have 4 screens in front of you on the TD Ameritrade Think Pipes platform. Futures are about flat. I think S&P is just barely in the green, so not a whole lot of momentum on this left-hand screen. Again, that's a 1-minute chart going into the open. GSX is gapped up. This is not the railroad. This is the Chinese tech firm that's out there gapping up. So I like that. We're going to look at taking that higher. It got a double upgrade by Goldman Sachs and Deutsche Bank going higher based off of earnings. Here's the opening bell. And then lower, for our short, we have Spotify. I'm not really interested in taking a short unless the market sells off overall. Really like this long here in GSX. You can see it's up 7%. So we're going to let it open and do its thing here for just a second. Predicting around a 35-cent stop. It'd be nice if it sold off down here to 34. So and then we'll turn around and take it higher. Spotify, pretty decent size move down there, a couple dollar move down, and it's a large price point. So if you're a short only kind of person, it's going to be a tough entry with it selling off so much right away. Deutsche Bank has given us that kind of opening that we would like, for a long. We'll switch to that second. But GSX set the low of the day here at 34.05. We'll let it get into minute 2 before it goes higher. And look at that, just like screaming higher while I'm sitting here looking at it. So that can be a frustrating part of when you're planning your entry and then the thing takes off. Look at that. So, 34 to 35, that would have been your entry. So 35, that's basically a buck move higher. That was about a 4R, 5R move right there in that, 20 seconds? Not in it. And not going to be able to get in it. I guess that was a 4% move right there, higher in GSX. So major player, good on somebody for anyhow snagging that. Look at this thing powered higher. Well, so the famous words, let's wait till minute 2. And then in that 5 seconds, we would have had to wait for that entry point. Thing screams higher. So, crud. All right. So Spotify, let's take a look at that. Yep. Got already a, what's that? $3.50 move down in the stock. So it's continuing to fall off. If you really look at the long term, Spotify, I don't really know how they make their money, but when you look at this thing was up here at 350 to 370 or so for a long time, kind of bouncing off those tops. Really sold off hard, in the past couple months. Again, they're losing money hand over fist. Spotify, streaming, with all these streaming music services out there, as far as I know, that are free. I mean, my podcast is on Spotify. I don't pay them, so I don't know how they make their money. I mean, I'm sort of advertising, I get that, but things bouncing off, maybe getting, 250, if it could drop below 250. I just don't know what's propping that stock up, if you will. Okay, let's get back to let's look at some other things that are in motion, some other shorts that are out there from today. Pinterest whiffed earnings pretty hard, so they were down 12%. Pre-market down 13% now, so selling off pretty hard with no real, doesn't even look like the bottom's in there. So again, big red market today would take Pinterest down with it. Let's see, In-Phase Energy, ENPH, is down 8% pre-market. That thing is falling off a cliff too. Again, that was on earnings for both Spotify and In-Phase. Again, too far gone to be able to take. Switching back long, we have Deutsche Bank, which is really just kind of sitting there, not a whole lot of volume. Boyd Gaming, BYD, was gapping up earlier. It was up in this range. Obviously, it's not there anymore. This was up that 6, 7, 8%. It's down there. You see it just hit earnings. It's kind of an interesting play, though, off of earnings. Low of the day, 69, basically a 75-cent stop. You'd have to take it here. It's just not enough volume to be able to really take this. But here's your lower, there's your entry. So lower stop, 69.75. So it'd be 1R. Just thinking out loud here. I didn't take this trade. But 1R, you've got a 3R range really built into it right there and out at 72. If you're adventuresome, you could take Boyd Gaming long here. It looks like the bottom is in. I'm not going to move on. So that would be on your own. All right, Google. Let's look at Google. Technically, Alphabet. There's your big move up. Hasn't really moved today. Again, tough to trade a $2,400 share. It's still up decently, even though it's selling off into the open. I think love the long-term prospects of Google. And then the last one is, can't read my own writing, UTL. That's what it was gapping up. Again, I don't know what they do, but gapping up nicely. Not a lot of volume though. That's here's a couple thousand shares. So not a whole lot you can really do with the volume off of that. So, all right, Deutsche Bank sold off, didn't work. GSX you would have had to grab pretty much from the get-go to capture that move, and I did not, so missed it. Okay, switching back to the zooming back out into the long-term investing sort of stuff. MNMD again is Mind Medicine. Some folks have asked me should buy more here. You're really don't know, right? This is a really a tough try prediction to try to figure out if this is it's going to go higher or not. It's attractive from the fact that it just got listed, so it's off the over-the-counter markets into the NASDAQ. It's attractive that once it hits $5, it can be held by mutual funds. So therefore, if it goes five, things that hit five tend to go higher. But it's really just it's tough. Again, Mind Medicine, you're thinking psychedelics, LSD type stuff. There was an article out this morning about a CEO getting fired because he microdosed LSD going into meetings because it helped with creativity. I think that behavior is not only illegal, but generally frowned upon around here, right? So, for like LSD and psychedelics to go mainstream, I don't know. That the marijuana theme makes perfect sense. The psychedelic theme does not to me, but it doesn't mean you couldn't make some money on the speculation of it. Anyhow, low price point, that'd be something you'd have to load up on your own. There's Google, 4%. Shopify on the move up, as we talked about. AMD did talk about with one client, talked about chip makers yesterday. Intel's kind of dead. Can't really put more money into Intel. AMD is not, so you could switch to AMD. They've got a lot of runway in front of them. There's Facebook up before earnings. It's kind of looking for, there's Baba up a little bit. Was looking for Apple going into earnings. I do not see it on the list. Let's check the downside. Syrian, FireEye, Starbucks, all leading the losers. Starbucks had some issues. I don't really talk much about Starbucks anymore since I've kind of switched to Luckin Coffee. But Starbucks had earnings yesterday or the day before, and there was a lot of concern with Starbucks. Again, I left that name when they decided to open up their stores as a homeless refugee camp. That's harsh, but what they did there is they decided that they would welcome any and all comers into their store. And yeah, I mean, I get it from a big heart perspective. That's great. From a business model perspective, those are small stores. They don't have a lot of room. And when you have non-paying customers, welcomed in, just that slows down flow and profitability and things. And it was a big political move. So left Starbucks personally. There's still some in the book, obviously, here since you see it. Boeing again selling off because of earnings. Clean energy selling off. Kind of surprised that one's down. Again, no Apple on here. So let's see what Apple's doing today. Ahead of earnings. All right, pretty well flat, only moved 10 cents. So here's your 5-day look at Apple. Again, positive going in. I do think people probably start buying it into the close. That generally happens with tech firms anyway when they release earnings. But then we'll see. Again, it should be about half an hour after the close when they release earnings, and we'll go from there. Facebook, I think we saw was up today, right? So up 1.8. So people buying it into earnings. So we shall see. All right, let's switch back to overall the market. S&P's in the green, NASDAQ and Dow are about a third of a point in the red. Let's switch over to the Coverdell. Okay, so a couple of options, whether you're investing for yourself, your kids, your grandkids, it doesn't matter. If you're putting money away for college, there's really two big options to do it. Well, there's really three. There's state-sponsored stuff. Texas Tomorrow Fund, Louisiana has a fund. A lot of those things are state-sponsored. I don't even cover those, right? The 529, which is the more mainstream of the two between 529 and Coverdell, again, it's state-sponsored. You can't invest in individual stocks. There's huge limits on it, though, to the tune of several $100,000 you can jam into these things. So that's kind of right for most people, is to do that sort of investing. However, if you are into individual stocks / individual holdings and you want to maybe take a lot more risk for education because you're trying to get a nice big number, the Coverdell is your vehicle for doing that. The biggest issue right there is it's $2,000 per beneficiary. We're at the 529. You can put, several people can put up to their own gift tax max, of 15,000 into towards one beneficiary. So if you have a child out there, mom can do 15,000, dad can do 15, grandma can do 15, grandpa can do 15, Uncle Joe can do 15. That sort of thing. That can add up fairly quickly. It doesn't matter the source on a Coverdell, it's only 2,000 no matter what. So it's not a lot of money to work with. Like, I want to put my child into Google. Well, you can't afford a whole share. So excuse me, you'd have to go into a fractional share program. So a lot of people are like, the numbers aren't big enough to worry about. You can go to with an options only strategy in a Coverdell. You'd have to do that on your own. That would take far too much time for a professional money manager to do that for the gain that's out there. Now you put some zeros on this account and that's a different story. But for $2,000, you could buy a couple of options out there, or a couple shares of Tesla or whatever your particular favorite is. And again, if you start them young, you have an 18-year look, right, before they're probably using these funds. So if you have a 529 and an ESA, most people generally use the 529 stuff and let the ESA stuff work. Same rule applies. It's for education. It's not taxed until they actually use it. And if they use it for education, it's never taxed, right? So you can use it for private school, K through 12. You do have to use it by age 30, where 529s are very different, to where you can just change the beneficiary and keep that money cooking for others. And then 2,000 limit that we talked about. No income levels associated with the ESA. And again, everything's got to be gone by age 30. Otherwise, you're going to hit a tax trigger. So, all right, a little more complicated than a 529, a little more off the out of the mainstream, but certainly a viable option. So, all right, chat looks clean today, so nothing to answer Q&A wise. So thanks for checking in. We'll see you guys back tomorrow. Bye.